everyone, I am Apeksha and I welcome you back to TMR Talks. Our today's talk is going to be on a company which is going to launch its IPO. So we have Mrs. Bector's Food Specialty Limited and it is planning to raise 540 crore rupees from the Indian markets. So let us go straight away to the most important question, that is, what is the business model of this company? So this company operates mainly in these two segments, as you can see, which is bakery and biscuits. And these products that they manufacture, they fall under premium or mid-premium category. So under biscuits, they have cookies, creams, crackers, digestives. And under bakery, they have buns, breads, pizza bases, cakes. Plus, they have recently introduced a few new products as well, which are again into premium segment, such as garlic bread, cheese garlic buns, frozen cookies, etc. Now what we will do is we will go a little in depth into both of these segments and we will try to understand how are they operating. So let us begin with the biscuit segment. So this is how the distribution network of biscuit segment looks like. One important point here is that they have been supplying to Indian Railways as well. If we were to observe here the retail outlets of the well-established players, then this company's retail chain appears to be very small and their overall share in the branded biscuits category is also 1%. But if we talk about the north of India, this company is amongst the top 2 Indian biscuit manufacturers in the premium and mid-premium category. So this is for Punjab, Himachal Pradesh, Ladakh, Jammu and Kashmir. Okay. Now in this case, we have to focus more on this question as to how are they planning to increase this overall share in the market. So we will talk a little more about it as we move ahead. It is one of the leading exporters of biscuits from India. So if we talk about calendar year 2019, they had a approximate share of 12% in the Indian biscuit export market. Also, when they export their product, sometimes it is under their own brand name, sometimes the importer's label, private label is used. Let us come down to the bakery segment. So this is how the bakery segment looks like. Now, importantly, here they have been supplying to the QSRs, which is very interesting. So they have, they have been supplying to Burger King and Yum restaurants since 2013. For Hardcastle, it is for last 13 years, and for Connaught Plaza restaurants, it is since 1995. So it's approximately 25 years now. So this is a really good and interesting thing. This tells us how strong the brand is. We also saw that they supply to Indian Railways. But one little point to be noted is that they do not have any long-term supply agreements with these QSRs. But considering the fact that they have been dealing with each of these players for more than 5 years minimum now, the probability of getting the orders is actually on a higher side. And this is how the branded market of bread looks like. So they have a 5% share over here. Now let us try to understand how the financials of the company look like. So this is the total income and PAT margin. So there is a growth in total income from FY 18 to 19, but 19 to 20 it is pretty stagnant. This is how the revenue breakup of the company is like. So this is very interesting. They have a good mix of, export, domestic market, QSR chain, and there is certain percentage for contract manufacturing as well. Now, strategically, they have been, working on increasing their institutional tie-ups. So if they are able to increase it, that will, become like a regular revenue generating avenue for them. Second of all, talking about the export market, they are going to discontinue their business operations in African markets because of political unrest, socio-economic issues, and their focus is going to shift to exporting to developed and emerging markets. So they have also mentioned that this will help them in improving their margins. Plus under contract manufacturing, they manufacture Oreo and Choco Bake cookies. I think all of us have heard about this, at least about Oreo. The margin for each product category is also healthy and the overall EBITDA margin is also good. So the overall EBITDA margin is at around about 12%. If we look at the PAT margins, it has gone to 8% for half year 21. Now that is because there is some one-time other income which is added. So that is not going to continue. So please make a note of that. So basically liabilities which are no longer required are returned back, and that is why you can see this jump. Talking about ROCE and ROE, there is scope for improvement. The debt to equity ratio is on a lower side, which is a good sign. And then we have PE. So the PE of the company is at 54. Now let's go to the peer comparison and try to understand about other companies. Now Britannia and Nestle are very big and very well established players, so we won't directly go and compare the figures here. But if we then, that is why we went ahead and calculated or analyzed the book value as well, and the book value is less compared to other players except for Pratap Snacks. Coming down to the offer details, the issue is open from 15th December to 17th December. It is planning to raise 540 crores like I told you, out of which offer for sale is 500 crores and fresh issue is only 40.54 crores. Okay, and this money is going to be used towards financing the project cost for the expansion. So they are going to have a new manufacturing plant at Rajpura where they are going to have a new line for biscuits. So let us see how will this impact. So this is the installed capacity for the company. The current manufacturing plants are almost running at 60 to 70% of their capacity. A couple of them are at 80 to 90 as well. So there is some scope for improvement here. Plus the new manufacturing plant is also going to add to this. So we understand that there is scope or there is room for this company to grow. And just like any typical FMCG company, this company will also increase, will also improve, but you cannot expect an exponential growth straight away. And it wouldn't even go down in terms of sales, right? So we can see the overall industry growth as well. There is a CAGR of 9%. So according to us, you can go ahead, apply for this company, and if on listing you get around 20% listing gains on the day of listing, you can think of exiting the stock as well. But talking about the all in all business, the brand is strong, the company is doing good. If they improve a little bit on the margin front and they try to increase their market share, which they are trying to, we spoke about it, then overall it is a really good company that you can go ahead with. So that's it from my end. If you have any questions, doubts, your suggestions, do write to us in the comment section, and subscribe to the channel if you haven't done that already. We have videos, we come up with videos related to financial analysis, economic analysis, trading, etc. So yeah, thank you so much.